said, we've been banging the drum for kind of some supersized mortgage rate cuts by the Bank of Canada. I know in October we were all in on 50 and even saying it could be more. I'm kind of glad that we didn't do more than 50. 50 seems like the right number in retrospect. December, what's your call?
Think about this from my point of view and probably my client's point of view exclusively when we're talking about interest rates. I'm like, let's get them down. Lower the better. There's nothing holding me back from wanting to pay less interest.
Sure. Yeah, definitely.
And all my clients are echoing the same thing. I'm sure yours are as well. In terms of like overall economic policy, in terms of interest rates, I'm like, I'm not so concerned about that. I think a supersized cut now, it has to be over 50 basis points. I don't even consider 50 basis points supersized. I think that's actually practical based on how fast the Bank of Canada cranked this thing up and the devastating effect it had on certainly the mortgage and the real estate market. Look, I'm ready for 75 basis points. I'm ready for, a full 100 basis points. I think that a big factor going into it will be when the November inflation numbers are released. If that falls back under 2%, because remember we went from 2 down to 1.6, I think, and then back up to 2. I think if that stays at 2 or goes a little bit lower than 2%, that's a good trend. Then we can get 50 to 100 in December.
So the latest market bets on rate easing for Canada. The odds are for the Bank of Canada, it's meeting on December 11th, a 50 basis point rate cut. There's a 22% chance, and a 25 basis point cut. There's a 78% chance. So there's
I could see that.
Yeah, there's no world in which there's zero. Pardon me.
I could see that in terms of like this betting, like the people weighing in on it, and I bet those numbers change. When we'll get the inflation numbers for November? Usually it'll be around that time, like the end of the first week of the next month.
Yeah, so, kind of in that range.
I think that right before that decision, we'll probably get that news, and then that will lock in everybody's, bet. If inflation is up a little bit, it's going to be 25 basis points. If inflation is down, then you'll see the numbers
since Trump
shift.
came in, those rates of the chances have been going down for a 50 basis point cut. It was at one point about 50-50. And so as we get closer, it's like, okay, well, 25 now, 25 in January, and then a longer pause for the next rate cut is what's happening right now. I think it's like,
there's certainly a lot of turmoil, especially when this guy goes onto Truth Social or whatever. He's allowed back on Twitter, right? Or X.
He is, yeah. But he owns Truth Social.
Yeah. Who goes on that?
And the Federal Reserve meeting on December 18th. So this is the U.S. rate cut. There's a 70% chance of a 25 basis points cut and a 30% chance at no change. So nowhere in their world are they expecting supersized cuts right now. And I think that also tethers the Canadian rate cut decisions as well.
I mean, it certainly will have an impact. I mean, we meet again. Is it end of January, early February, Bank of Canada?
It's January 20 something.
Yeah, it would be.
It's 28th or something like that. It's like right at the end of January.
Yeah. So if we don't get the big one here, we'll at least have 2 or 3 weeks of President Trump in the White House. Maybe that will create some stability. Maybe it'll blow it all to hell.
Who knows? Maybe we'll do a supersized cut again in January. I don't think so. I think it's 25. 25 is pretty locked in December and January. But we'll see. And fixed rates probably don't fall at all over this time frame.
No.
The variable rates will be affected by these rate cuts. The fixed rates will be likely flat, if not up even a little bit.
Do you think that when the bank is issuing their variable rate discount, they will have factored in on less of a discount because the appetite for a fixed rate mortgage, we're going to see that appetite really lean out. People aren't going to be shopping for even a shorter term fixed rate mortgage. if they're really watching the way that the money is moving, we may see some not so great discounts on the variable as a result. Do you think that's possible? Is that how they make their policy?
Yeah, I think that. Well, I don't think the Bank of Canada worries at all about what the banks will do with their
Not
variable
so
rate
much the Bank
interest.
of Canada, but the variable rate discount. If you're a bank and you're lending out money, and you know that there's going to be less of an appetite for fixed rate, isn't that your permission to say, hey, we don't have to discount our
Yeah.
variable rate as much?
We'll see it a lot with, at least with the posted rates, what the banks will advertise on their rates. Those discounts get worse, but we do see them discount more for well qualified people, borrowers who have a great mortgage broker. So those there is some there is some
Uh,
ability to get lower rates, but we do find that, like, for example, one of our lenders, the Bank of Canada, cut their prime rate, they followed suit, and then their discount shrunk
that's what.
about 0.15%, which was
Yeah.
very frustrating.
Well, that's it. And we've been watching the discounts shrink a little bit. I mean, the discounts on a variable rate weren't very good, let's say 2 years ago,
Yeah.
because there was all kinds of weird uncertainty. But now, as the picture seems to be coming into focus a little bit more. But what we're seeing, like on an uninsured mortgage, that discount might only be 50, 45 basis points. Even
Yeah.
on an insured side, it would be pretty standard post-pandemic, or even during the pandemic, or sorry, pre-pandemic, and during the pandemic, to have a prime -1, sometimes
Right.
even 1.15. And we're seeing
Yeah.
that shrink up to like prime -0.9, prime
Yeah. Yeah.
-0.85.
For sure. Those prime ice, like 1.2 that we had at one point, those are not available. And just so everybody knows, like the prime, so how variable rates work is the prime rate, which today is 5.95%, is discounted by, say, for example, 1%. So the rate that you would pay would be the prime rate minus 1%. So you would pay 4.95% on prime minus 1, and the discount is what is offered, and you by the lenders, and then you lock in that discount for your 5-year term. And so when we're talking about the discounts changing, it's only what's changing on new offers from new mortgages. Essentially,
Right.
it's the prime rate that changes, say, every 8
Yeah.
meetings
So
that the Bank of Canada
if
has.
you only have a 50 basis points discount off the prime rate, then you really, really need that prime rate to come down. And the prime rate usually sits about 2.2% over whatever the policy rate or the overnight rate is. So
Yeah.
we need a lot of movement, if the discount's not good, to keep that lower than whatever the fixed rate is out there. So there's a little bit of a stranglehold play going on right now. I think it's like, every time we think that the variable is going to be the super juicy option, they make it a little less juicy, and they try to
Yeah.
keep everything a little bit more balanced.
Yeah.
I still think the future is variable, but hopefully we'll get those big discounts so we can pass them on.
Yeah. Yeah, I think you're right. I think we will see what happens coming up.